Life has seasons to it, but if you're building a system that's not going through seasons and instead has an expiration date, that's what I'm going to ask you to question, right? So if retirement is the wrong idea, Jason, what replaces the idea of retirement?
It's continuation. It is a system that stays functional. It's when the markets move, emotions rise, timelines are compressing, the opportunity appears, like Warren Buffett. Builders aren't trying to stop, they're trying to remain steady while they stay useful.
That is where we're talking about money compounding and growing over time, right? If you took a dollar today and you were able to compound that same dollar over your lifetime, what we're doing is creating a financial system that grows with you. It doesn't expire. And that brings us all the way back to our original question. Does your money have an expiration date? Welcome to another episode of WealthWise Banking. I'm here today with my co-host Jason Sipple, and we are going to ask you a tough question. And that is, does your money have an expiration date? So before we get into it, Jason, how you been?
Doing amazing, man. And I'm just blessed to be here, grateful for our listeners. And does your money have an expiration? That is a interesting topic that I'm looking forward to unpack with you, brother. And you always forget to Jeremy Lee. You're Jeremy Lee Huggins, brother. Jeremy Lee. And I am Jason Patrick Sipple. So let's hop into this.
Yeah, I think what really sparked this was listening to people who talk about retirement and the idea of retirement, right? So they work, they save, they retire, and then they slowly talk about this 4% rule of spending down what they built, right? But I think the concept of retirement, which is to remove from service, doesn't fit our builder community because a lot of our builders don't remove themselves from service, right? Instead, they build capable plans. They're calm, they're useful. And I think that question, about whether or not you're acting, you're saying that you're a builder, but you're acting and putting your money towards a system that's going to eventually dwindle down is what prompted this, right? Does your money plan have an expiration date? So does your money keep working for you regardless of what's going on in the markets? If a timeline collapses or a decision forces your hand, does it quietly assume the usefulness ends at a certain age? And I think that if you stick with us on this episode, we'll start uncovering the answer to that question.
Yeah, because most families are still planning like life ends on schedule. Like you actually have a plan, right? And the retirement piece portion of it is going to assume that you're withdrawing, like you've built up. It's the accumulation model, right? You build, and now you're coming down the mountain. And most people don't have a plan for coming down the mountain, brother. The finish line, the slow reduction of the responsibility. We're going to go live the life we want now. But builders, you, I, our listeners, we're not designing our life, like you said, around stepping out of service. We actually become more useful. We actually are more focused on legacy and making sure the people behind us, the other leaders that we've helped lead, are designing systems that continue to work through, like you said, the market cycles, the health events, the tax changes, the inflation changes, business opportunities, the world changing, family responsibility, all this stuff. So we want to challenge that finish line myth and go a little deeper, like you said, into what is the plan or what can we do to really remove all of that uncertainty.
Yeah, I mean, if we think about 2008, right? Credit, it vanished overnight. Businesses, they had strong numbers, yet they still had to shut their doors. Homes, real estate was being sold at a fraction of the price. Okay. COVID, entire industries, they froze,
Yeah,
payroll
pause for
stopped.
a second there. Like you just said, homes were sold for a fraction of their value. We've been watching homes, in Orlando, and I'm seeing them steadily. Something's coming, bro. Like I see stuff going down 7K, 50K, 100K, like pretty rapidly changing. Like it doesn't seem like a lot's happening. It seems like our economy's okay, but keep going. Like if you have what we're
Well, I
going
think the point here is that none of those folks are reckless, though, are they? They're not
to,
reckless. They're just exposed. And I want to talk about that timing because if you're building an entire plan around a future retirement date, around margaritas on the beach, and you're with health and science continue to expand human life, I think we need to bring that back to the present. It's like, yes, I'm putting this off towards a future date, but as we can see, what happens? What's the constant in life, Jason?
Oh, I know the answer. Call me. Hey, listeners, if you know it, pop it in our chat. It is change. That is
Yeah.
the one constant in life. And as we were talking about before this, you know, people do not plan. Like when you imagine yourself retiring on the beach with, that umbrella drink in your drink, and you got the water just gently lapping up over over your feet, and your feet are going deeper into the sand, and you're like, ah, this is paradise. Our reality is we don't think long range. It doesn't feel urgent. So we put off some of the things that we need in place to make that your reality, if that's what you really want.
Yeah, so let's remove the finish line because you shouldn't be looking at life with a finish line. And you want to build systems that are there and contractual no matter what. If we're trying to build a system, we want to make sure that we get rid of some of these assumptions in life. We want to build deliberate points that continue to grow and expand with our life, regardless of having this massive nest egg that I put all this money into my 401k, and at age 65, I'm going to have X dollars that I can only touch 4% of. That is also assuming that market conditions aren't going to be changing. But as we've seen, 2008, COVID, 9/11, all these different previous events, to Jason's point, his current real estate scenario, change happens. And you need to build a system that can absorb these pressures. That way, you're not forced to make decisions under time constraints, and especially not forced to make financial decisions the older you get when you don't have time necessarily on your side. Yes, we are expanding, we are getting older, but our ability to rebound is obviously better when you're younger. And we want to put these systems in place today to help build these shock absorbers.
That's it. And you mentioned an important part too, right there. It is building that foundation the uncommon way. Because like you said, if you're building it the common way, and there's nothing wrong, like it's good. If your company offers a match and you're putting money into the retirement plan. But as I'm always, talking about my strategy calls with folks, I had multiple conversations like this in the last week. Like people that are having pain today and right now, and they're putting money towards their future self that's locked up, that is, tax deferred. So you have no idea what it's going to be. And you talked about 2008 twice already in this episode. Well, in 2008, as we covered in the last episode, the government printed a lot of money. And it put us in this massive inflationary period that we haven't come out of, which means that the dollars that are in that retirement account for later, that are locked up, that you can't use, are actually less valuable than they would have been today. Where they're
Yeah, I remember growing up as a kid, the big goal was to have $1 million in an IRA. $1 million in an IRA 20 years from now ain't $1 million, right? So you need to be planning if that's your role, if that's your goal. Like if you want to continue with the traditional way of save, 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 spend 4% a year, then you're going to need a couple $1 million, or you can start building that plan today that's going to continue to grow and compound with you, guaranteed over time. I think that's the difference. Do we want to build a system that allows to grow with us, and the older we get, the stronger it gets, or do we want to build a system with an actual expiration date for our money? Which one do you want?
Yeah, and what Jeremy means, just to make it really clear, what Jeremy means by an expiration date for your money, he means if you're drawing down at 4% and you don't know where the market's going to be when you retire, and you don't know where inflation's going to be when you're retiring, and you don't know how long you're going to live, well, guess what? That money is going to run out. And then what happens? Then you end up like most Americans, back in work, not because you want to, but because you have to, because there wasn't a long-term plan in place for your money. All right. This is not how builders think. This is not how you guys and gals all think. You're not. Retirement's not the frame. Like retirement's a made up thing, Jeremy. First of all, maybe we should debunk that for a second, right? Retirement's the wrong frame for us.
Mm-hmm.
So let's go through that a little bit. Like why does the word retirement feel fundamentally wrong for our listeners?
I think it's removing yourself from service, right? Like it's the idea of to retire something means that you're going to slow down and stop. And I know that for males, typically, if we're going to get into the data here, the ones and zeros, men who retire, like come to a full stop, typically die within 6 years of said retirement, right? Or if you want to get the most out of life, what are you going to do? Well, you're not going to remove yourself from service. You're just going to pivot your priorities. That's what you're going to do. I don't think that we remove ourselves so much as we lean in deeper to the things that we actually care about most. And I think the more life that you experience, the more it exposes what you actually care about. And the older you get, you spend more intentional time with those things. So you're spending this younger life exploring a little bit, and then the older you get, you find out what's intentional, what's meaningful for you, and that's where you start concentrating that the one valuable resource you have. That's your time. That's what you want to do.
That's it. And that's the most valuable asset we own, right? Is our time or you could say our attention with the way marketing and everything's set up. Like those are super valuable assets. And you're talking about contribution. It's one of our human needs. You know, if you study human needs, we're talking about how over life, like you said, Jeremy, at first you're looking for variety, you're looking what are you curious at? You're looking to build and contribute and to do a good job and to build something that's meaningful for yourself, for your family, for those that you love. And then later in life, you want the opportunity to go and do like my wife does, like do mission trips, to go and be more involved with the community, to give back more, to be more intentional with what you're doing with that time, because then you're in a different phase of life and you need to have a system that's going to last as long as you do.
Yeah, that's the fuel, right? So money isn't the end goal. Money is the fuel that lets you be intentional about your time. I think that's what maybe a reframing of what money is that it allows us to do the things that we want to do on our own schedule. And we want to make sure that you're building a system that's intentional and not going to expire, right? And so what's a quiet signal that this is already happening? Well, we see it with
Yes.
insurance carriers, life insurance carriers. It used to be age 100, but if you look at an illustration today, it's now age 121. So the idea of having $1 million in a retirement account by age 65, okay, cool. You're halfway there. All right.
Yeah.
You still have the other half of your life to live, according to the insurance carriers. Now, I got it. We're not saying the average person lives until that age. What we're saying is that the lifespan is already expanding. And as the timeline gets longer, your system also needs to have a longer horizon. The idea of retiring your money at age 65, I would say that might be a little bit short-sighted.
I think it's very short-sighted. I mean, the actuarial scientists, I mean, those guys and gals are another level of math, but they're the reason why these mutually owned dividend paying companies are so profitable. And this is kind of this episode was a little bit born out of this observation. Well, when did that switch? And it switched around, the switch from 100 years old on the actuarial table, meaning like when are people expected to die, to 121. It was somewhere in between like 2002 and 2006. It's not like a hard date, but that is going to keep going out longer. And we might in our lifetime, like there's a couple books I'm reading right now, Jeremy, that says that, hey, there's a couple people that are going to live to 150. So, like at 67, you're not even halfway there, brother. So, we really got to start building, like you say, contingency plans for continuation, and longer life doesn't mean more leisure, right? It just, it means more decisions.
Yeah. So as your life does get longer than expected, ask yourself, does the system that you're building have an expiration date? Does it get tighter or is it getting stronger? And that's one of the reasons we like putting our money in our favorite asset because as it grows and as it compounds, guaranteed, we're building a system that continues to expand. It continues to get stronger. So I'm not worried about what happens in the market when I'm 65, 70, 80 years old because I built and I pressure test a system that's going to continue to grow and get stronger regardless of market conditions. That's what I think we need to understand is that we're building for with intentionality, with intentionality and growth.
No, and let's just sprinkle. Let's every now and then just say guaranteed, and I'm like, and just keep sprinkling that in because when you hear our passion about this, it's because of guarantees and control. When you hope that something works out, when you do what I did for years, and I think Jeremy, maybe not because of your contingency planning and everything else. I don't know if you were following my path of showing up first, leaving last, working hard, being humble, being polite, saying please, saying thank you, yes, ma'am, yes, sir, and hoping it's going to work out. That's not a plan, right? So what breaks over time is that the plans that we have when we're operating from that borrower mentality, is the plans don't fail from the mistakes. They fail when the assumptions meet the actual reality that's happening.
Yeah. Yeah, correct. Yeah, you're going to get blindsided at the end of the day, right? And it has nothing to do with your spending. It's sequencing, it's your timing, it's the compression, right? What happens in your decision making ability when time compresses? How do you respond? So, when the market drops, when income slows down, when you have a health event, when your business needs capital, the pain isn't the event itself, it's actually realizing the plan that you developed, right? What, are you depending on calm or are you depending on timing? That's what you need to build. Are you building an intentional system that is time dependence? Or are you
I
building an intentional system that gets stronger?
Yeah, and I think a better, a more succinct question to that is, are when all those things happen, like you said, a capital event with your business, a health event, something that shifts the priority immediately. Like these things change, like we always talk about, the one guarantee. Change and accidents or things of that nature, it's not like they are on your calendar.
No, they're not. I don't have
Jeremy
the
laughed out loud because because it's so true. They're not on your calendar. Those things, we don't know they're coming. So the calm that we want you to feel like we feel is because we're being intentional and we're living below our means now to prepare for everything that we want when it happens and making sure we can stay calm. Like we don't have to go to the mailbox and go, "Oh, look, here's a loan for this amount that we're going to pay someone else over this period of time. Here's this, here's that." And we're going to somebody else and asking them for help. And guess what? If we're asking them for help, they're going to charge us a lot of interest.
yeah,
And we don't have control of that scenario.
life has seasons to it, right? But if you're building a system that's not going through seasons and instead has an expiration date, that's what I'm going to ask you to question, right? So if retirement is the wrong idea, Jason, what replaces the idea of retirement?
It's continuation. It is a system that stays functional. It's when the markets move, emotions rise, timelines are compressing, the opportunity appears, like Warren Buffett. Builders aren't trying to stop, they're trying to remain steady while they stay useful.
Yeah, that's the one layer here that we really want to talk about, right? The operating layer that's beneath everything else that you do. We're not changing your plan. What we're doing is intentionally supporting it. That's what we're doing. We're collectively bringing everything together. So if I'm still building in 20, 30, 40, 50 years, what supports that plan? Do I want to add to it or do I want to have an expiration date? Do I want my money to actually retire with me? No, I don't want my money to retirement. I want to make it stronger over time.
No, and you don't want the RMDs either, right? Like that's another thing we're talking about and comparing to. You like I joke,
Define that for our listeners, if you
you're
would.
required minimal distributions from an account that you don't have full control over because you have to take out a certain amount of money at retirement year over year over year versus you have like we're talking about really building a capital system that stays usable under pressure.
Mm-hmm.
Not something with additional requirements later after we've built the thing.
Yeah, it's money that you can move without selling what you meant to keep, without incurring taxation. You don't need to ask permission, right? You don't need to accept terms today that you would normally reject because time put you in a corner. Those rules that we're building around money, they're decided today during times of peace. That's what we're doing. So the decisions, they're not debated when emotions are high. Instead, we're replacing that with intentional growth. And this is what protects it, right? This is the operating layer that Jason and I are really good at developing. This is what separates us from most other people is our ability to one, identify the stressful event that you're going to likely encounter later in life. And we do that by talking about your current situation, not mine, not Jason's, but what are your current money patterns? Where are you putting money today? What is your intention over time? And then we'll start pressure testing where your plan has pressure leaks and gaps. And we fill those gaps with our design mechanism, right? It's there to support and bring continuity and stability to your actual plan.
And I love all of that. It's a very clear path. It's an easy path. And it's uncommon, Jeremy. So a lot of, and now not all of you, because you've been listening to us for a while, you've been around our proverbial campfire of information, but it's really about the action step. Jeremy, you keep talking about the action, you keep talking about how we're meeting someone and building the system and pressurizing or testing the pressure in their existing system to make sure they have what they want as far as an outcome. And all that's saying is we're going to meet you where you're at financially, and we're going to meet you where you're at mentally and help you make a decision that's going to start building this system today, but still be there 10 years, 20 years, 30 years, 50 years. And maybe, depending on your age, for me, maybe I'm not even halfway through at 51. Maybe it's 51 years more, right? Maybe it's 60
Mhm.
years. So,
And that design determines the behavior of it, right? So everything is unique. We want to make sure that the capital is there when you need it. It's stable. You have contractual access. There's continuity. And because of the, what was that word you said? Guaranteed? Because
yeah,
there's
remember
guarantees.
I said just sprinkle it in, just guaranteed. Just
Yeah.
whisper it
Uh,
once. Guaranteed.
So that is where we're talking about money compounding and growing over time, right? If you took a dollar today and you were able to compound that same dollar over your lifetime, what we're doing is creating a financial system that grows with you. It doesn't expire. And that brings us all the way back to our original question. Does your money have an expiration date? And if it does, if you're building it to have X dollars at X retirement plan with the intentionality of only spending 4%, assuming that markets are always going to be going up, that there's always going to be stability in your life, I'm going to tell you now, your plan is destined to fail because life will force your hand. You'll be forced to make a decision under pressure, and you'll accept terms that you wouldn't normally have to accept, or you'll sell something and incur taxation, or you're running the sequence of returns risk. There's all these other things that are going out there that if you're not intentional about your money and you're not building a system that grows with you, you're destined to fail. I mean, the only way that you don't fail is that you build up such a massive retirement plan that you have FU money, like true FU money that can absorb anything, like Jeff Bezos money, right? Scale it down for your, living expenses, but that's the way you don't fail is I've got so much freaking money, I can burn it, Jeremy. Cool. Most people don't. For the people who don't, that's who we're looking to help.
And they're builders. Again, they're the folks that understand that the system is not set up for their success in the way that you're talking about because there's so many unknowns, there's so many variables. And it just comes down to that simple understanding that, when you get to the quote unquote retirement age, that's not really a real number. Like for some people, it might be 40. For some people, it might be 50. It might be 60. It's just when are you done doing the thing that you're currently doing? And then you have that number of freedom where now you have money freedom, you have time freedom, and then you can say, hey, what's next? And that's all we're saying. Does your money run out before you do?
Yeah, I think that borrowers, they do plan for an ending, right? Builders, we're designing for continuation. If you really wanted to narrow it down, borrowers, ending, builders, continuation. And as you grow and experience more life, I want you to be more intentional about where you're spending your time. And again, the fuel that allows you to do that is capital, it's liquidity, it's cash. And we want to make sure that that grows with you. It's not running out. Because if you are a builder, you're likely very intentional about other areas of your life, such as your health. You're probably destined to live longer than the retirement plan that you've been sold over your lifetime.
When you're looking to really get this started, when you're identifying as a builder, you want to get to WealthWise Bank and request a decision readiness review with either Jeremy or myself. And this is our working session together. This is, bring one scenario for us that's going to matter in your life. We're going to walk you through the current setup, where the money's going to come from. Like we're not asking you to work harder, but we're going to say, where's the money coming from? How fast can it move? What it's going to cost? And what would be forced. So that way you're going to leave with a clear verdict that your system's either going to continue under pressure or you'll now know exactly what needs reinforcement before timing makes it expensive, before that one thing in life makes it scary, actually. So don't guess, confirm this, book that call with us so you can have your decision readiness review.
Yeah. So I think that kind of wraps things up, unless you got anything else, Jason.
I don't, but we appreciate your time, your energy. We understand this is your most valuable asset. And remember, be like Nike because you're already in banking.
Just do it.
Yeah, you're not the banker yet. All right, Jeremy, another great episode. Everyone, God bless, and we'll see you in the next one.
Yeah. See you next week. Take care.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.